Hello and welcome everyone to Oil Asset of the Day for the 22nd of October. So as we go into a new week with oil here, what are we looking at? So essentially last week, we did continue to see that range-bound trade. And as we mentioned, we continue to buy in on these dips on oil. Essentially, we're looking to trade the ranges, but we're also looking for more upside in the coming weeks and as we get into the month of November. Now, certainly each time we are seeing oil pull back towards that 52 to 53 US dollar per barrel handle, we're absolutely seeing support at those levels. It's a very tradable range. Often you can very quickly get 100 to 200 points off the table here with oil each time we're dipping down to those levels. If you observe oil on higher time frames such as the weekly chart, this becomes much more evident when you're going over to those higher time frames where continually each time we're coming down over 2019 back towards that 51 to 52 US dollar per barrel handle, we're seeing a lot of support at that levels. Now, overall hedge funds, money managers, they have been getting quite bearish in oil in the latest weeks. However, overall positioning is at the same levels of extreme sell shorts that we saw going back to January of this year, which does suggest if we were to see a bounce and a breakout to the upside, we could very quickly see short covering and a potential short squeeze as well. Over this week, I am actually targeting 55 US dollars per barrel on oil. We continue to maintain our long positions. We've taken more profit off the table last week, another 100-point breakout that we saw on Friday. And we've really just continued to look out for these opportunities to buy back in on these dips lower for oil. I like the 52 to 53 US dollar per barrel level. In fact, we bounced back towards that level just yesterday, and oil right now is back above $53.50 per barrel again. So over this week, I'm looking for that range of approximately 52.50 up to around the 55.50 level. More consolidation expected, but overall I'm looking for higher closes here as we get towards the end of the week and potentially building up a base here to break out as we get into the month of November as well. But for now, we are anticipating Wednesday's oil inventory data to show another oversupply in the headline number, but a drawdown in gasoline and distillate inventories as well. Typically, the Wednesdays does actually provide quite a lot of volatility for oil prices and some great opportunities to buy each time we're getting a move down towards that 52 US dollar per barrel handle. We also, in the background, we do have more rhetorics regarding the US and China trade negotiations, which at the moment have been fairly positive in the latest days, and that is providing a bit of additional support to oil. And right now, we don't really have any geopolitical risk either. So as soon as that does flare up again, when you see geopolitical risk escalate in the Middle East, often that very quickly does see oil catch a bid, anywhere from a 2 to 3% move to the upside in one day. And we haven't really seen things ramp up too much in the last few days. So I would still keep the potential for a breakout on oil on any breaking news items with respect to the Middle East. If we were to see any escalation, that can very quickly also provide further support for oil. So again, really in summary, we are expecting more consolidation over the course of this week. I'm looking to be a buyer at the lower end of the ranges that I mentioned, around 52, 53 US dollars per barrel. And ultimately, I'm looking for a tap of $55 per barrel between now and the end of the week. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.